welcome to April's edition of Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's FinReg and FinTech news. Now, one of the biggest things sitting here in the UK that financial institutions have been talking about of all kinds is the incoming consumer duty rules that the Financial Conduct Authority is introducing next year. This is a preparation year for the new regime, which seeks to make it much easier for consumers to understand how they're being marketed to. They need to see that their products that they're being pitched are meeting their needs, their fair value, and that if they need support for any reason, be that in promotion or understanding of the products or further down the line, financial institutions are meeting those requirements. Now, so it's a very large piece of regulation. It's something that a lot of firms are getting to grips with at the moment, given we've got less than 12 months now before it comes into force. And it's certainly top of mind for a lot of firms that are pitching within the retail investor space. That's also similar in tone to what some of the SEC has been looking at across the pond in terms of brokers pitching retail brokers pitching to clients on that side, following GameStop and the like as well. So certainly there's a lot of focus on how you market to individual investors across the board, including how you use social media influencers in the fintech and finreg realm, and some, I think they're called finfluencers, which I think is a very bizarre term. But on that note, the FCA this month launched a campaign with a Love Island, believe it or not, contestant designed to help consumers understand product fitness and how influencers, for that matter, should have a basic understanding of the products that they're helping to pitch to the person on the street. So certainly there are a lot of angles to this, and it's an interesting tactic on the part of a regulator to hire somebody that's outside of the financial services realm, but certainly a savvy one maybe. We'll see how that works out, but certainly something to watch going forward. Another sort of FinReg and FinTech combined big piece of news this month was end of last month, in fact, was the launch of the distributed ledger pilot scheme or pilot regime by the EU level authorities. Now, it's a 6-year programme that's going on to offer firms within the market infrastructure realm and FMIs overall the ability to test out DLT type technologies in a safe environment in this sandbox. So I think it's similar in tone to what the Monetary Authority of Singapore did a fair few years ago, trying to test out some of the limitations and the practical challenges of introducing DLT in the trading and securities settlement space. Now, it's interesting to include trading because obviously there's been a lot of discussion over the last decade or so about the appropriateness of DLT to something that is extremely latency sensitive. So it will be an interesting exercise. I think it's certainly a long program. 6 years is more than enough time to try out a lot of different things, and it gives these pilot programs the time and, I guess, unfortunately, the money, if it's hopefully it's not a waste of money, but experimentation time to be able to test these technologies to see whether they really are the technologies of the future for financial market infrastructures. I certainly think it's an interesting thing to do. I hope we get more leeway with other technologies going forward as well. I know that AI is something else that regulators are keeping a close eye on, although there are certainly many aspects of that with regards to ethics that need to be monitored in terms of coding as well. But certainly progress, and the launch is a big deal. So we'll be watching this space. Now, in terms of what I've been up to, I was at Post Trade 360 in Stockholm a couple of weeks ago at the start of this month. Certainly a lot of interesting discussions there with the local financial market infrastructures, domestic and within the Nordic region as well. A lot of discussion about the preparation work for big changes going on in the CSD landscape. The potential move to adopt Target 2 securities or move to Target 2 securities was discussed. Maybe not so much progress in the interim on that, but certainly a lot of discussion about it with a view to looking out to 2030. In terms of other discussions, we certainly had some very interesting chats about AI. Common theme seems to be everywhere at the moment, not just ChatGPT, but generative AI in general, and the impact and influence it may have on our working lives going forward, and the line between what exactly a human should be doing and what a machine is capable of doing, and where we need to be careful about relying on machines too much without acknowledging there may be biases in the data that they're being fed, or biases in the underlying code, as I previously mentioned. So certainly a lot of food for thought during that discussion. I chaired a panel in the morning on corporate governance, looking at the Shareholder Rights Directive, the second Shareholder Rights Directive, and how much progress is made around improving corporate governance in the EU. Certainly a big topic at the moment with the ESG agenda. Something that is up for review coming up this year by the European level authorities. So SRD3 is in the highlight, sort of in the horizon potentially, or SRR, the Shareholder Rights Regulation, if they want to iron out some of the discrepancies in terms of implementation that we've seen thus far. So some interesting discussion about that. We also touched on things like pass-through voting and improving governance on that side as well. With regards to accountability to end shareholders from the issuer level. We also looked in the afternoon, I chaired a panel on fintech and asset servicing partnerships, something I've blogged about before. If you've looked through the archives of Global Custodian, you'll see that I've written blogs on this topic before. Certainly there are lots of challenges, particularly as we look at the Digital Operational Resilience Act, when it comes to partnering between the two parties there. But there are lots of benefits and opportunities. We certainly touched on many of those. Obviously, fintechs are more nimble in many ways because they can operate outside of the bands of heavily regulated entities. So maybe they've given leeway to be able to experiment with some of the technologies that banks may be not able to, or more directly. There's also the benefits of fostering a partnership where you learn from each other in terms of industry experience, and also, the centralization of working with a vendor that's working with many other market participants. So you sort of have a collective wisdom coming from the community there as well. Also, we obviously touched on, as I mentioned, DORA and the challenges of onboarding, particularly for smaller fintechs as they become more and more scrutinized by their clients, by regulators overall, including their use of cloud platforms and whether they need to be multi-cloud, which could be cost prohibitive for some of those smaller fintechs especially. So there's certainly a lot of food for thought too on that front, and it was a most enjoyable discussion. There were some interesting sessions later the next day on some of the challenges and worries that the industry has. Top of the list of concerns in the industry and in the region at the moment in the Nordics seems to be very similar to the rest of the world. Top of the list was geopolitical risk, unsurprising as to what's been going on over the last couple of years. And also, again, unsurprising, cybersecurity was another top risk, and what's keeping up a lot of operations people up at night at the moment in terms of how that's evolving now. Obviously, geopolitical risk and cyber risk are quite interrelated because one is funding the other. So certainly a lot of discussion around that topic and how to better keep pace with the innovation of cyber criminals, another topic I've been spending a lot of time on over the last few months. On the financial institution front, obviously last month I discussed some of the challenges we've seen with regards to rebuilding trust and confidence in the markets. We're continuing to see more challenges on that front, a lot of regulatory discussion about how to better address stability, financial stability, market stability, individual entity stability. And there's a lot of discussion about whether recovery and resolution planning was sufficient enough and whether regulators took the right decisions in terms of the decisions they made with bank resolution or deciding to bail out some of the banks, or for that matter, the UBS Credit Suisse merger, which is ongoing. On the latter, we've seen some discussions more recently about the potential integration of those two entities, the spinning out of certain bits of it, the winding down of the Credit Suisse Investment Bank, There have been estimates that it should take around about 3 years for a lot of the major work to be done. I'd say it's probably more like a decade if any sort of precursors are to be recognised as well, you know, in terms of what we've seen with regards to large mergers. Sometimes things just don't get merged at all, but certainly will be interesting to see bank funeral planning, as it were, being discussed by regulators as we head into the middle part of the year. And my final thoughts for the month are quite simple. It is the 3rd birthday of Firebrand Research. Yay! I would like to say thank you to all of my industry contacts, my friends, and of course, all of my wonderful clients out there that have worked with us over the past 3 years. It's certainly been a pleasure working with you guys, and I hope you continue to support Firebrand in the future. Happy birthday!